Welcome to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
That intro music actually goes for a really long time. I've just realized. Jack must do a fade out or something at the start here.
I think he just starts talking over it or something. I don't know.
yeah, he's far more skilled than any of us. But
intro guy today.
Yeah, our resident Texan, I should say, isn't available today. So I've put my Houston Astros shirt on to try bring a little bit of Jack presence to this stream. And yeah, the plan is to be talking about 13Fs for this one. We had a fresh batch of 13F filings come out this week. I think it's just going to be Frank and me for this one. We may or may not have Karan turn up at some stage, but we'll see how we go. So that's the plan for this stream. But before we get into that, Frank, we had a pretty big vote this week. I'll just share my screen here to show the people what went down. But we had our first ever change to the punch card portfolio. Google obviously got voted in over the past couple of weeks between the crew. And so that means that the people was put to the people to vote one of the stocks out of the punch card portfolio. So what do you make of these results here, Frank?
Can we zoom in just a little bit? I just can't quite make it out, but I'm actually surprised that the stock they wanted to keep in the most was Process. I guess that's a little bit of a shock to me, but I don't disagree necessarily, other than the beloved KPG, of course. But no surprises here. I think I've been very vocal about trying to get Turtle Beach out of the portfolio, and I've got lucky with that one, I think.
Yeah, maybe gives us a bit of an indication about what might be next to go. If we have another vote potentially, it's actually pretty tight between the next few, but
another poll would be a lot more close, I think. But
yeah, cool. Well, that was the vote. So let me just show the people our new punch card portfolio, because we've obviously got the Google position in there now. And we didn't do any sort of rebalancing. We had a bit of a talk about that in our group chat, I know, but we decided just to basically take the loss on the Turtle Beach position, roll that straight into Alphabet with that dollar amount. So hopefully that's coming through. This is what the punch card portfolio now looks like. So big 30% plus allocation to KPG there. That probably feels familiar to you anyway, Frank. That's
it's a little bit small for my portfolio.
There we go. And obviously Seritage, Process, and Alibaba remain in there, and Alphabet now is a 9% position. So how would you say you're feeling about the portfolio overall at this point, Frank?
Other than the performance of the portfolio, I think it's actually, I don't mind it. I kind of like most of the stocks in here now. Seritage would be the one I feel least comfortable about, but I think the upside potential there is still there. Maybe the weighting's a bit too heavy, but everything else I like. Most or a few of them at least are in my portfolio. So I'm liking what I'm seeing, even though the performance is not agreeing with that.
Yeah, I guess it's sort of the double-edged sword of a concentrated portfolio. We're going to have some big down years, but hopefully some big up years as well. And it'd be quite interesting because with Seritage, if everything goes to plan, we should start getting some big kind of cash dividend payments coming out of Seritage. So I'm not quite sure if any of us have put thought into how we might manage that in the punch card portfolio here, whether it just gets reallocated to the other stocks or, I don't know, like what. Yeah.
KPG has the dividend as well, and with Process that could happen.
Yeah, well, with KPG, the dividends are just getting reinvested. So if I think I should be able to show that in ShareSite here somewhere. So we've had a few KPG pays a monthly dividend, right? So we've got all these reinvestments coming through. So That's how I've managed it for KPG. I don't know that we'd want to do. I don't know. It'd be kind of like doing a weird buyback in a way, right? If we took a big distribution out of Seritage and plowed it back into more Seritage shares, that might get a bit funky.
Yeah, I guess we'll have to make a rule about that one. That's probably the position we want to keep the cash, and then I guess we have to vote something in to allocate it towards. And over time, assuming the liquidation is successful, then Seritage has to get itself out of there. So
yeah,
the money's got to go somewhere.
We could just be we could get even more concentrated and just keep reallocating it to the other stocks. We could drop from 5 to 4 or something. I don't know. We'll cross the bridge. Hopefully get to it anyway.
The people in the chat are wanting more Turkey stocks in there. Eunice is in there pushing that again.
Yeah, what have we got? Eunice, too little exposure to Turkey. Do we have any indirect exposure to Turkey at all in there? Is Prosus doing anything in Turkey? Probably not.
I'm not sure. Is Alibaba, do they have something in Turkey? Or am I making that up?
Probably. They get a new subsidiary most days, I think. So I'd be surprised if they weren't. I don't know. Maybe AliExpress touches Turkey or Lazada, or I'm not quite sure. But anyhow, that's the punch card portfolio. Brief update on that. Let's get to the topic of the stream, which is covering some of the 13F filings from the last quarter. Should we just start with Berkshire and Buffett? That's probably a nice place to start. There's a few moves we can kind of talk through on that one. And then if people have got 13Fs that you want us to look at, just drop that in the chat as well. And we can obviously have a look. So
just quickly, I'll pull up this comment while you're doing that.
Sure.
Alibaba owns Trenadol, which, I thought I heard of that. The biggest e-commerce player in Turkey. So just another one of the parts of the business that a lot of people probably don't understand, but
yeah.
So there is some Turkey exposure. We're not fully avoiding the area.
There you go. Still not enough, though, by the sounds of it, Eunice. All right. Let's have a look through Super Chat, actually, before we get into that from After Dinner Investor. Races is up 100% Races is up 100% and plenty more to go. Just spreading it around a little bit. There you go.
It's not one I follow closely, but I've seen a tweet. Might have been by Jason, actually. I think it's approaching the value that Monish originally called the fair value when he bought into it. Is that right?
That could be right. I think it's up about 10 times in US dollar terms now, so probably more in lira terms since his first purchase.
I'm sure since then he's probably adjusted what he thinks it's worth, but he's done well on the stock at least anyway. Yeah,
for sure. Jason can tell us in the comments, but I think he said if it ever got up to like a $2 billion US dollar market cap, he'd consider selling. And he first got in at something like a 30 million market cap. So, long way to go on that basis, at least.
It's still a tiny position in his portfolio, really. I guess that's a liquidity problem more than anything, but it's not too meaningful.
Yeah, so Jason's saying 400% to go until we hit original NAV. That's kind of crazy. All right, let's have a look at Buffett's 13F. Or Berkshire's 13F, I should say. It's not just
Buffett.
Actually, did you catch the Todd Combs article this week?
This week? No, I read that talk that he did.
With that one.
Michael Mobason, or Mobason, however you say that name. That was really, really good. I just skimmed like a summary of it, but there was a lot of good things in there.
Cool. Is that zoomed in enough for everyone? Hopefully. Cool. Right.
Can you zoom a little bit more, slightly?
A little bit more.
Maybe it's just my screen on StreamYard, but
yeah. Okay. Hopefully that's all right. I can put it on a smaller monitor if not. But where should we start? Apple unchanged, still 40+% of the US equity portfolio. Bank of America unchanged. And the kind of two moves right up the top end of the portfolio are adds to Chevron and Occidental. So I don't think too many surprises there. The Occidental purchases, we've been getting Form 4s, out. So we know kind of within 2 days of when he's purchasing Oxy, I think, is the rules there on the Form 4s. So no major surprises there. But
So as a dollar value, would that be the biggest ad we're seeing here, or is Taiwan Semiconductor maybe more?
That's a
They might be
good
pretty
question.
close. But yeah, so they're
Yeah,
probably the two biggest moves in the portfolio anyway.
yeah. Any thoughts on Buffett continuing to buy oil?
No, I guess we kind of knew it was happening. I wouldn't be surprised if there's even more moving forward, to be honest. I guess he's bullish for the long term of oil. We're kind of seeing that now, and he's kind of done this in the past in inflationary environments as well.
Yeah,
But yeah, no surprise. I actually thought the increase in Occidental would be higher just from what we've been seeing, but yeah.
yeah. Very cool. Have you got any interest at all in buying some of these oil companies? I know a lot of kind of special situation and deep value kind of guys are in various very small oil companies. Have you taken a close look at any?
I think I just have a lack of understanding in the industry overall. I really don't like. I cannot get comfortable with what oil's going to look like tomorrow, let alone 5, 10 years from now. So if I did, it would have to be some kind of asset play, some kind of special situation, a liquidation, or something happening, a unique scenario rather than just being long term oil. So there's a few companies that have come across my radar here and there where I thought that looked interesting, but no, overall, I think I just don't understand it well enough.
Yeah, fair enough.
You were talking about it a little bit in the past. Is it still something?
Yeah, still something I'm kind of interested in. I feel like I understand the general thesis of what long-term supply and demand dynamics might look like. I'm just really struggling to build conviction around it, really. Um, that's kind of where I'm at. I think I understand the general principles and everything. There's some companies out there doing interesting kind of capital allocation things, but I don't know that I'm at a point where I'm willing to bet money on, oil staying at a particular price just yet. So yeah, still kind of thinking about it, but haven't done anything at this stage. I've just switched across to Whale Wisdom. I kind of prefer this view, but those were a couple of the moves. So yeah, that's where we're at. Position 9 and 10 for Buffett are interesting changes. So we've got a trim to Activision. I believe that's a stock that both either Ted or Todd and Warren Buffett both own. We know Buffett's buying it because of the workout Microsoft purchase. So interesting to see him exit that, even when I think the spread's got a little wider on that one.
I was
Between
going to
him and
say,
those.
what is
Yeah.
the spread on that now? Because that is really weird that there was any trimming happening there. Unless Ted and Todd were trying to free up capital for something else that they bought, which could be the Taiwan position
It's
below.
possible.
But it is strange.
Yeah,
I
so
guess
Activision's at $74 a share, so that's down from
the buyout price is 92 or something, I think.
95, I think. Yeah.
Okay,
So when
yeah.
he was first getting interested when it kind of dipped below 80, so maybe like 78ish, somewhere around there, and it's down to 74, and he's got out. So
I
it's kind of
guess
interesting.
like if it was a break of the thesis, like if they thought the deal wasn't going ahead, they would exit the whole position. So I guess the only logic is it's Ted and Todd and their thesis around the buy was different because they entered it before it was going through a buyout, I guess. So
Yeah.
yeah.
And if they want to buy something, they need to get the cash from somewhere. They need to sell something to buy something new. They don't have they don't get the cash being sent to Omaha coming to them, right? That's going to Warren.
I think Buffett has plenty lying around. He might be able to spare the boys a few extra dollars, but
yeah, possibly. Well, he's given them 30 billion or something so far. Is
that
he?
all?
Yeah, it's about that. Probably biggest move of the quarter, I think, that most people are talking about. Taiwan Semiconductor, brand new position, only 1.3% of the portfolio, or 1.4%, but $4 billion position, probably just above like the limit of what you think a Ted and Todd stock might be. What's your take on that?
Yeah, when I saw it, I was trying to wrap my head around whether it was a Buffett buy or not. probably just too small for Buffett, but a really large position for Ted or Todd. So it's like in that strange kind of range.
Yeah.
If it is Buffett, then I guess we would see more kind of going into it over time and it becomes a bigger position. But I guess we have a while to wait and see for that. But either way, I'm interested to see what Buffett thinks about that position. I'm sure he'll be asked it, him and Charlie, next time they're public anywhere. I'm sure that'll come up as a big part of the conversation. Yeah, a lot more geopolitical risk than you think Buffett would usually be willing to take. But a huge buy if it's Ted or Todd. So yeah, it's definitely interesting.
Yeah, I might just jump over to Ticker and have a quick look at it. Share the full screen. Hopefully that'll come through. But yeah, if we look at some of the financials for Taiwan Semiconductor, go out quite a long time. It's been a pretty steadily growing business, kind of, yeah, whichever way you slice it, really. And I think margins, last time I looked at this, seem to be pretty stable and potentially growing slightly. Yeah, sort of flat-ish margins, maybe slightly expanding like into the high 30s. So just purely looking at some of the financials, it seems like a Buffett type of business. I'm surprised to see him buy like a company in this industry, though. That feels like something that would be outside his circle of competence, but possibly not.
Yeah, maybe after understanding Apple a little bit more, maybe that ties to this in some way. I don't know, but it is a Buffett-esque type business, I guess. But yeah, I think just the way he's talked about the risk involved in China, Taiwan, or however you spin it, I think doesn't. Yeah, I don't know. It would seem strange if it was Buffett. But yeah, hopefully he does comment on it. I know after dinner investors in the chat saying he doesn't think he'll talk about it and saying it definitely was Buffett.
Yeah.
So it'll be interesting at least. Maybe Charlie will be more willing to talk about it.
Yeah. Yeah. Maybe this is a Charlie stock. But we don't talk about those that often other than when they show up at DJCO. But yeah, it seems like a very Buffett-esque business, like steady growing, high margins, mid to high 20% return on equity here. I would assume that they're probably retaining most of their capital. No, they're paying out maybe half of their earnings, but still retaining a good amount.
Yeah.
Yeah. So they're still, reinvesting north of 50% though at that 20 to 30% return on equity rate. So I guess that's where the growth's coming. But I don't know, surprising one to see.
Yeah, and I'd assume there's some type of long-term moat, at least there has been in the past. I don't know the industry well enough to know that continues, but yeah.
Yeah. After dinner investors talk to high-level people. Did you hear about that?
I've been seeing it around that.
Yeah. Jason, we actually tried to get some high-level people on this episode, but I think they're sleeping at the moment. So we'll see if any high-level people turn up. Right, let's get moving along. So that's kind of the top 10. I guess once we get past that for Buffett, we're getting into like less than 1% positions. But was there anything that kind of jumped out at you here? Like we've got him trimming some of the bank stocks, Bank of New York Mellon, I think that is, US Bancorp. Both of those kind of getting trimmed down. He obviously exited Wells Fargo earlier in the year, maybe late last year. Yeah, don't know. Any other highlights from the Berkshire 13F?
No, honestly, I didn't look too much past the Taiwan Semiconductor buy, which was probably the main standout. Knowing that the oil buys were already happening, that would be interesting, but we already kind of knew that, I guess. Yeah, I think the semiconductors, the big standout and unusual buy in the 13F anyway.
For sure. But the other thing that I have seen a few people chatting about actually, and after dinner investors in the chat with it here as well, is we've got Paramount. The dollar amount suggests maybe a 10%-ish position for one of the smaller managers. Is that a stock you've taken much of a look at before?
No, pretty much never looked at it. I don't think. Not one I understand, and I haven't. I don't even know what the valuation kind of looks like on that. What about you?
Yeah, never really looked at it. I sort of decided that streaming's too hard for me. Although I
Yeah.
feel like I could get my head around Netflix. Outside of that, I don't know.
One Jason's talked about a bit. Does he own it, or is he just
I am
following it?
unsure. Yeah, not sure. It's hard. It's like it's still such a quickly changing industry that I just don't really know where it's all what it's gonna look like in 5 or 10 years from today.
Yeah, I don't see it disappearing. Like just reading through, even in the description, then some of the brands they have in there, like it's not like it's going to disappear, but I would find it hard to understand what it looks like in 10 years, for sure.
Yeah, agreed. Cool. Okay. Well, that's Buffett. Who should we have a look at next?
Do you want to pull up maybe Burry? There's a lot of talk about in Michael Burry's 13F at least anyway. A few interesting things in there. At least in the US, and I guess with Burry, he does invest in a lot of international stocks as well, which we get less disclosure about, but a lot of names popping up now on the US side at least.
Yeah, and just before we look too closely at Michael Burry's 13F, I'm just going to pull up a tweet because this is probably a good indication of potentially why he's bought the stocks that he's bought. But if I share that, this is a tweet from the Michael Burry archive because for whatever reason, Michael Burry loves to delete his tweets, but it's on the internet forever. So this is something he said a little while back. Companies that are heavily leveraged but have the cash flow and termed out debt have options today, including reducing their debt loads at a significant discount brought on by higher rates. But as Graham said, in such a case, better off buying the stocks. Frank, any guess at what Michael Burry then went and did?
Bought about 5 or 6 names of exactly that.
He bought the stocks. That's exactly what he did. So we've got Geo Group. That's, I think, a private prison. That was his single US stock in the 13F last quarter. But we've got at least 2 names that I recognize here. I don't recognize all of them, but the 2 I do recognize, which are Curate and Charter, are both good examples of companies that Michael Burry just described. Curate's super leveraged. We can maybe have a look at that in a sec, but like there's a huge delta between, say, the market cap and the enterprise value, and a lot of their debt is due like 2030, 2040, 2050. It's like way out down the road, and I believe Charter's a pretty similar situation, and both of those companies have been doing pretty material buybacks as far as I recall it as well. Are you familiar with any of the others on that list?
No, it's mostly the same as you, but all of them have kind of come up as these really deep value, cheap stocks that you kind of hear getting floated around on Twitter, especially Curate and Charter at least. But yeah, it's all the cheap buybacks, leverage buybacks, which seems to make sense in an environment like this. So I understand why he's doing it. I am curious, do we have an idea of how much those US positions are compared to the total value of his portfolio?
Yeah,
maybe someone in the chat knows they could bring that up too.
Well, it's got assets under management 291 million, and there's 41 million in this 13F. Right. So whatever the maths on that is, not a huge chunk really.
Yeah, that's interesting.
Yeah.
But so just have a quick look. Just a basket bet of these, maybe, rather than concentrating in any one name.
Yeah, I think so. Like these are the numbers on Curate: market cap of 800 million, enterprise value of 7.4 billion. That's one of the more leveraged things that you'll see around.
Yeah,
yeah, which is going to be kind of interesting if you compare like a EV EBIT to a PE. Maybe that might jump out. Oh, the earnings are doing wacky stuff, but yeah, it was a PE of like 3 through here, but on an enterprise value basis, it's like a 7. So, yeah, big delta with all the debt and stuff. So that's an interesting one. And what was the other one? Charter, I think, right?
Yeah.
So Charter, much more stable business, as I recall it. Let's do revenue, gross profit, operating income. Whoa. Let's just look at the past few years. But yeah, much more stable business. And again, as I recall it, they've been doing some pretty material share repurchases. So, oopsie. If we look at shares outstanding, have been coming down pretty aggressively the past few years.
Yeah, these leverage buybacks, I guess, which is the similar theme between all of them. The other one down the bottom was Liberty, the Latin American version, I think. Another John Malone stock, which I think maybe 2 or 3 at least of these names are that he bought.
Certainly Curate is. Yeah, there's lots of Liberties. So what's that one?
Yeah, it's a Latin America one, I'm pretty sure. And it's pretty leveraged as well. So I've just pulled it up on Ticker now. So 1.7 billion market cap and then around 10 billion EV.
Holy hell.
Yeah.
Yeah. And what we might as well look at this other one. So that's AJRD, whatever that is.
Is that the other prison stock, maybe?
Eurojet Rocketdyne Holdings. That almost sounds like Aerotyne International on the pink sheets. Right, what's happening with this one? Actually, no. So market cap 4 billion, enterprise value 4 billion. So that's maybe a different one.
Right. I think there's one more name in there we didn't look at too.
Core Civic. Corrections Corporation of America. That must be another prison.
Yeah, that's the one I must have been thinking of.
Okay.
I just saw a tweet saying something about half of his US holdings are in prison stocks now, which is another weird theme that Burry seems to like for whatever reason.
Maybe that just sounds better like in a book one day. That he was, in The Big Short, it was like he's only investing in one thing and it's water. I got no idea what happened to that, but now it's just prisons.
Yeah, I'm very curious what happened to that actually.
Yeah. Okay, well that's Michael Burry. Who do you want to take a look at next?
Well, should we just quickly cover Guy Spear and Lilu since they've done absolutely nothing as usual?
Yeah, sure.
I guess, well, even if you don't pull them up, we can just talk about the fact that they're these very, I guess, long-term do-nothing investors. So it's always interesting to check in on them because when they do something, it's more exciting than, say, a Burry who's very active.
Yeah, this is showing. Actually, we don't have a Q3 13F in Whale Wisdom, but I have seen on Dataroma. Ignoring the Twitter position, it will look identical. At Q3, he did nothing.
Yeah.
So, yeah. There you go.
Do we know if either of those? Well, we could assume Lilu's probably more active in China at least. What about Guy Spear? Do you know if he's done anything internationally that you've heard about?
Yeah, I know his annual reports are public now, so people can look those up.
Oh, right.
Or request access to them. His biggest position in the 13F you'll see is Berkshire, and he's got 2 classes of Berkshire stock, which here are like 30% of the portfolio. I believe at the time of his last annual report, Berkshire was a 15% position rather than 30. So I guess he's got about half his portfolio in the US, if my maths is right there. And his equal largest position was BYD as well. He's got like a 15% position in BYD, something like that. I believe there's maybe Nestle and some other Indian energy exchanges in. There's a big holding. I'm sure there's others as well. Yeah. But there you go.
Yeah. Well, I guess there's the two, staying true to the long-term value investing philosophy, I guess.
Yeah, for sure. Get Himalaya Capital. So Yeah, 18.8 billion under management apparently, and 1.7 billion in this 13F. So that puts things in perspective. This is probably only 10% of Lilo's fund.
Yeah, that's pretty crazy. And after the investor just brought up Process, which Guy Spear owns as well.
Oh, of course, yeah.
Yeah.
Okay, master of doing nothing continues to do nothing. Good stuff.
In the chat where I'm seeing Cliff Sosin or maybe Rob Vinall, if you want to pull up.
Okay,
Either
let's do Rob first. He's RV Capital, right?
Yeah, can we kick after dinner investor out while we're talking about this one? Let's put him on a short-term ban just while we talk about what Rob Vinall was doing.
Yeah. Do you just want to introduce Rob Vinall for anyone that hasn't heard of him before?
I guess he kind of got popular around. Well, he's been investing since around 2008 or 9, I think. Maybe that's a little bit late even. But he had a pretty impressive track record, around 20% for a very long time. I think there was a story about him meeting with Munger and talking with Charlie Munger fairly often, which probably made him even more popular, I guess. But a steady long-term investor that was outperforming for a long time. He's been one that I've been a concentrated value investor as well, which is always interesting. I've been following him for a while, but obviously with the names we'll look at in a second, he's having a pretty rough year. I guess he's down probably 50% plus, with one of his largest positions being Carvana, and another name I'm blanking on right now that was down big.
Meta.
Oh, well, there's another one. And then Wix, and there's a bunch of them. They're all down pretty big. Okay. So his portfolio wouldn't be looking too good at the moment, I don't think.
Yeah, and he's another one who writes really good letters, I've found. And again, people can just look up RV Capital or Rob Vinall letters on Google, and that should come up.
I think you have to request access to those now, maybe. But
okay.
Yeah, they come to my Gmail still, so you can get access to them.
Yeah, they're really good. He often, and I think you can, if you can get access, you can go like back through the archive from memory and, see letters from years ago when he was first purchasing into particular stocks and what he was kind of saying at the time. And he invests all over the place. Like I think we won't see, for example, Process in here. He's got a big position in. He owns Ryman Healthcare here in New Zealand, actually. He's owned that for quite a long time. So kind of invest everywhere as well. And good annual meeting videos on YouTube, like Jason said as well. But anyway, this is the 13F. Talk us through it, Frank. What's been happening here?
Well, the main one I just have to talk about is the double down on Carvana. So down a stock that's down, I think 97% or something crazy, which he's held the whole time. He held this from years ago, and it was a reason why his portfolio was doing so well at the time. But while it's down to...
No, I don't think he's been in Carvana that long.
A couple of years, I think.
Yeah.
I might be wrong.
Certainly Cliff Sosin has.
Maybe I mixed up the two. But regardless, he still has a very high conviction for it, as he's increased his position by, can't quite read it, 37%, is it?
Yeah, 37%.
While it's down 97% year to date. So a lot of conviction.
Yeah, so this is the purchase history on Carvana, if you can see that okay.
2020.
So he's been in it since Q1 2020. Interesting. I actually didn't realize he was in and then out in 2020.
No, I didn't
3 or
notice
4%. And then, pretty much just 2022, really, with the big positions. It's you never know. You know it's not good when you add 4% and it goes from an 18% position to a 5% position.
I'm just looking at those reported prices on the right hand side too.
Yeah, that's
got back in at 230.
That's usually not a great sign.
But
it's fascinating. Like this is probably the first time he's been significantly down, kind of in public at least, right? So pretty cool to kind of see what he does in that situation, and clearly still likes Carvana, at least at these prices, enough to add to it.
Yeah, definitely.
Yeah, and he's one of the probably small group of people, I think, at this point hanging on to Meta, I'd suggest as well. Like we saw Lilu get out of it maybe a quarter or so ago.
Yeah, I think Lulu might have got out at good timing.
Yeah.
Well, kind of. I think the first drop off was about when he got out, and then it dropped off significantly again since then. So, yeah, but the rest of Rob Vinall's portfolio mostly stayed the same. What's that bottom position, the TRUP?
Trupanion.
Yeah, I don't know too much about that one, but a 12% add, so I guess that's noteworthy as well. But the rest is pretty much unchanged.
But it's a 0.7%.
Oh, right, yeah.
Yeah.
So
whereas like credit acceptance is 40% in here.
Which is about what Carvana was not too long ago for him.
Yeah, but again, like 645 million assets under management, and that's like a $1.5 million position, so it's kind of nothing.
Yeah, so that's pretty much a write-off there.
Yeah, and pet insurance, Joe tells us.
Right.
Seems overvalued. There we go. Right, what was the other one? Cliff Sosin, I think, CAS Investment Partners. People were mentioning that this is going to be a pretty similar story, I think, from memory. Like spectacular track record last few years. This one definitely driven by Carvana to a big extent, and having a very rough 2022. So
yeah, both these two. I can only imagine they're down at least 50 to 60%.
Yeah. Actually, far less activity than I would have expected. I haven't actually had a look at this one yet, but a 1% add to Carvana and holding all the rest.
That's a strange, random little ad there. Yeah, pretty much unchanged.
Yeah, it's interesting that he hasn't. I know for a long time he was kind of buying a bunch of the same stocks over and over again every single quarter. Presumably, he was having a bunch of inflows. So kind of interesting to see that he hasn't had a bunch of outflows, this year as the portfolio comes down. There's just one other stock. I might pull up a stock chart here for. So yeah, I mean, a lot of people will be familiar with the Carvana story, down 96% now year to date.
Yeah, that's a pretty crazy stock chart.
Yeah, but I mean, another portfolio position for him is Cardlytics, and if I pull up the Cardlytics stock chart here, down 94% this year.
Yeah, wow. I knew that one was down a lot as well. I didn't realize it was that much, though. That's crazy.
Yeah, so not quite sure what's going on there. You're suddenly really loud, Frank. I'm not sure if anyone else is catching that in the in the chat, but there we go. Right, so yeah, that's Cliff Sosin. It'll be interesting to see how these guys come out of 2022. We've talked about Carvana a bunch, obviously, on this stream. I have no particularly strong view on it, other than it's too hard basket for me, but I hope it works out for them.
How's the volume now? Is that any better or worse?
Yeah, that's good. That's good.
Cool.
Okay, should we take a few questions, or did you want to look at maybe one or two more 13Fs first?
I'll have you take some questions as we go, and if we see any names pop up, we can have a quick look as well.
Okay, cool. All right, get your questions in the chat, people, and we'll do our worst to answer them. So, what have we got? Any in there you want to have a crack at?
Well, there was a comment on Greg Alexander. I haven't even looked at his. Did he do anything that you've noticed?
Do you know what his fund's called?
No, I don't. I can check on Dataroma if you want. Oh, Conifer Management, CONIFER. Right.
Okay, here we go. So what have we got? Biggest position, Stellantis, and an add to that. I think that's been a big position for him for quite some time, actually. AXA Equitable Holdings, not familiar with that. Builders First Source, Yandex.
No real
Trim.
major changes, I guess, there. There's a new position, COF, but it's only 1.3% of the portfolio.
Capital One Finance.
So I guess the most significant thing there would be the add to Stellantis, which as a percentage-wise is pretty big.
Yeah. I believe he's got some international stuff as well. Yeah, 6 billion under management, and this is only 700 million reported. So,
Oh, wow.
well, I didn't think he had that much international stuff actually, but that's getting pretty serious. I think there are some things that show up on ticker actually. Oh yeah, there's a bunch of stuff here. So
yeah, okay.
Naked Wines.
Yeah, right. Delivery
Probably
Hero.
the only. Yeah, they're probably the. I've never looked at Delivery Hero, but I recognize the name. They're probably the only two stocks I'm familiar with.
Yeah, okay. Oh, that is interesting.
Yeah, don't know that I have a whole lot to add on many of those, but
yeah, no, he's not one that I followed too closely.
Yeah. Cool. Any questions in here you want to have a crack at?
I'll just have a quick scroll through.
What's on Frank's 13F most importantly? I don't think Frank's going to be answering that one too much these days.
I'm just trying to think in the past 3 months if I've even done anything. I have done some rebalancing, just had some cash that I kind of spread out across the portfolio. There would be one new ad in there, but I might leave that one private for now.
Yeah, fair enough.
People that follow me on Twitter probably catch on to these ideas anyway, but
yeah, cool. Well, good. Here's a good one from Luis. Any good book recommendations? Running low on the list, finishing the Art of Value Investing, maybe, by John Hines and Whitney Tillotson.
I haven't actually read anything in a while. I've been pretty slack on the investment books lately. Do you have any on the top of your head?
Just trying to think what I've actually read lately. I haven't been doing a whole lot of reading this year either, to be honest. I read Sam Zell's book earlier in the year. That's quite good. Am I being too subtle? That was a Jack and Brett Kelly recommendation, and that was pretty good. Yeah, been rereading a bit of stuff in Poor Charlie's Almanac, but Louise has like an OG copy of that from memory, I think. So, yeah, not a whole lot of suggestions at the moment.
I did just order Morgan Housel's book, Psychology of Money, which I hear is good. It's more broad than just investing, I think. More kind of personal finance related from what I understand. But I just ordered that, so that'll be the next one I read, I guess.
Yeah, actually, I did just order a book as well by the founder of Home Depot. He was on the Investors podcast not too long ago, and seems like a cool dude. So that's called Kick Up Some Dust. I'm going to read that, so I'll maybe share some thoughts on that when I get a chance to get through it. But that's one that'll be arriving soon. That's been like an unbelievably successful investment if anyone had owned Home Depot for a long time, by the way. That thing's a beast. But anyhow.
There's a question there. I think I can pull them up too. About Tortilla, which is one that I wrote about on Lone Wolves. The main change in share price being down that much is mostly macro related, so it doesn't change too much. Maybe the margin profile over the next given time frame. I won't put a time frame on how long this lasts, but it might seem worse, but I think the underlying business still remains intact, and they're certainly in a much better position than any competitor. So I don't think the business has got that much worse. I think just the environment they're in is worse, which justifies a lower share price, to be fair. But long term, I don't think I'm too concerned about that.
Yeah, okay. I see. So have they just reported numbers very reasonably recently?
I'm not sure what the most recent one was, actually. There was some commentary going back maybe 2 months now that was pretty pessimistic coming out from the CEO. I forget the exact comments, but the share price moved pretty significantly around that time.
Yeah.
But yeah, just you can imagine the expense profile in the UK is much higher.
Yeah, I'm seeing gross margins down a couple of percentage points, but I don't even know if this shows up correctly in ticker because it's quite small and the shares are weird because I think they've recently IPO'd, right?
Well, the margin profile going down is like all expected, especially just with the cost of goods going up. Food costs in general are going to be higher, so all of that's kind of baked in. And then in the operating side, they were getting a lot of money, government money, essentially during the coronavirus, the subsidies that kind of come through. So the margin profile was known to be lower than the market was kind of currently looking at the time, I guess. So none of that was unexpected. Just the ongoing costs, they're going to remain higher costs for a long time, I think. How long, I don't really know, but it doesn't really change what they're doing. They can still continue to roll out these businesses. Maybe they do it at a slightly slower rate, but the unit economics are virtually the same over the long term, other than the temporary increase in prices, I guess, which some of that they have the pricing power to manage anyway. So,
Yeah. Okay, cool. Frank, I forgot to tell you before we went live here, but I've got to go in about 5 minutes. So if there's any questions you really want to answer, let me know. What else
should we
have we
talk
got?
Baba earnings? It's coming up a fair bit.
How about this?
Well, maybe it's time to get. Maybe we don't talk about Baba then.
Yeah. For anyone listening, just audio only, because for those that don't know, we actually are putting this on some podcast platforms now. So check that out if you prefer. Kramer was pitching China stocks this afternoon, as the comment I've just pulled up. RIP China stocks, I guess. Right. Afternoon investor. What did you think of Baba earnings? If you had a chance to look at these in detail, Frank.
I wouldn't say in detail. I did go over it. I guess from the analyst expectations point of view, they beat earnings by about 10% or so, maybe even more. Free cash flow by about 20%. But overall, there's no real growth we're seeing in the business. It's relatively flat in almost every sense. It's just done better than what the market was expecting. I guess the margins, which you do have to adjust for, looked better than what everyone was thinking they were going to. But essentially, it's flat. Revenue down slightly or flat. So it's not like a great outcome. The cloud didn't even grow, which is pretty concerning. But considering the environment in China, I guess that was obviously why the stock is priced the way it is. So it's not unexpected. But yeah.
Yeah. I see they also bumped up their buyback program again, which is nice to see. I think another 15 billion from memory.
Yeah, I think that's right.
But yeah, obviously beat market expectations if anyone pays any attention at all to that. But yeah, overall pretty flat. I find this a really, which is kind of an interesting situation. Not great circumstances, but it's a tough one to analyze with zero COVID policies and all that kind of thing at the moment. I really think you just kind of got to wait to see what the business does out the other side. And if it's still flat, maybe then you make a decision. But I don't know. I don't know if you should be putting a whole lot of weight in the numbers really with everything that's going on.
I think one slight takeaway, if you're looking at the specific quarter, and this is more so referring to Tencent, who I did look over in a little bit more detail. They've reported only a few days before that as well. After 4 kind of declining quarters from Tencent, they finally had a growing quarter. So it does look like the most recent quarter in China has looked better. So theoretically, you could say that as long as regulations and I guess the zero COVID and all of that doesn't get any worse, then the trend could be going up, which the market seems to be reflecting in the share price too. So some small positives after a long time of negatives, I guess.
Yeah, for sure. Would be good if we had some high-level people on this episode to talk about China a bit more. But right, any other thoughts on Alibaba earnings? We should probably do a proper episode on it at some point. I think that was something we were going to try tie in today, but I don't know that any of us have had too much of a chance to look in depth yet.
Yeah, if the people interested, I guess we could do a maybe China stocks episode, talk Baba and Tencent in a bit more detail, since it does seem to be turning around a bit and we've had the earnings report. So
yeah. Okay, let's maybe do one more question. Are there any there that are jumping out at you?
Just a quick one. We won't take this to the last one, but is this where you're running off to, Tom? Going fishing?
No, I'm going to a 21st birthday. That's where I'm going.
Any more you're seeing there? A lot of Baba talk, but
yeah. This is an interesting one from Lionel. I really don't have a good answer on this at all. Frank, I think you've been exposed to this investment as well, or to the idea. What do you think of Sears Holdings Chapter? What do you think of Sears Holdings exiting Chapter 11? Docket show that 2049 bond will be paid, while it is 20% of face value. Yeah, I've seen people floating the idea of, I think Shield Q was the stock ticker, and more recently the bond as an investment idea for a while. It's just, I don't know, too hard for me, basically. Do you have any thoughts on this kind of stuff?
No, zero idea. Not something I even know about, really.
Yeah,
in specifics, at least, anyway.
Yeah, we probably should have mentioned it earlier, but when Michael Burry was talking about how the heavily indebted companies, have options in terms of repurchasing debt, what he was referring to there, which I don't know if some people will be familiar with this, obviously, but what he was referring to there is, since interest rates have gone up, a lot of bond prices for these companies have gone down significant amounts. So they might have, say, $1 billion of debt out, for example, but if the bonds are down 50%, they can retire that debt with $500 million, so that's something I probably should have mentioned earlier. That's what Michael Burry was kind of referring to there.
Do you want to finish on this one from Matt? Could you guys speak if you're feeling inflation in your specific countries? How's it going in New Zealand? Inflation hitting over there, Tom?
Let me just Google the NZ inflation rate. I think we're doing a bit better than the US. So yeah, 7.2% apparently is our current New Zealand inflation rate. I think the US is at 8, right? And the UK is like 11.
Sounds about right.
Yeah. So, yeah.
Day to day, are you feeling it? Is it like affecting you on a week by week kind of basis?
A little bit. I don't think I've seen anything crazy kind of happen. Fuel wise, like I actually have a work vehicle, which is quite nice. So I haven't felt the fuel price increase thing. But certainly in food for sure. I don't know. I've been a little immune to increasing lifestyle prices with the whole house purchase thing recently, because there's been a lot of money going out the door for all sorts of stuff. So I'm probably not in the best position to comment, really. But how about you?
Yeah, I don't even know what the inflation rate would be in Australia, but probably slightly higher than New Zealand, I would guess, or similar at least. On a week-by-week basis, I am starting to notice it. I kind of budget things out pretty strictly. So even just something like food prices, for example. So we spend weekly shopping. Previously, from my budget about a year ago that I originally wrote, $250 a week was more than enough food for me, my partner, and our 2-year-old son. Now we're spending well over $300 and cannot get it anywhere near below that. So I don't know which specific goods that would be from the most, but with no major changes, just prices going up. So you do feel that slightly. And then fuel prices, which again, in my budget would be doubled probably. So we'll see with some of the electricity and kind of gas bills as they come through. I haven't noticed it too much there, but I'm assuming the upcoming ones will be much worse. So I think for lower income families, they would be feeling it a lot right now. I guess I'm in a relatively well-off situation, so those little changes don't really hurt us as a family. But thinking about when I was growing up, when we had far less money, that'd be hitting hard, especially these electricity bills and things. So I think in Australia, the lower income families will be really starting to feel it, but we'll see how long it lasts, I guess, before we see the real impacts, I guess.
Yeah. I mean, particularly if they've just managed to buy a house or something and have some debt about to, fixed rates about to expire and that sort of stuff. I think that's one of the reasons, like Australia and New Zealand, maybe Australia even a little more so, have been a little slower to bump rates, whereas the US, I think they can be a bit more aggressive.
Yeah, so a lot of there's kind of that boom in real estate here in Australia, and I know you got to go, so we'll finish this pretty quick. But there was that boom in real estate, and all of that is still on fixed term. Usually, the debt is fixed for about 3 to 5 years on house purchases here in Australia. That's kind of the average. You can't go much longer. So everyone has that. So that's yet to hit these huge increases that they're about to start paying in probably the next year or two. So I think that's when we'll see the impact in Australia more so.
Yeah, for sure. Well, on that cheery note, let's wrap it up. Thanks everyone for coming along. I should say we've got a super chat from Jason. Thank you very much, Jason. Inflation is just a tailwind when you own races. I don't know if you knew that, but the more you know. Thank you for that, Jason. All right. Thank you, everyone, very much for tuning in as usual. If you've got any suggestions on topics for future streams, definitely let us know. But yeah, we appreciate you guys coming along every single week. And let me roll this outro because the people love the music. Here we go. We'll see you guys next week.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.